And welcome back. I noticed that Realtor.com announced a new housing market forecast through 2023. They provide the real estate market predictions for 2023 for mortgage rates, home prices, housing inventory, and of course, much, much more. So in today's video, I'm going to share exactly what they are forecasting for 2023 and also for the remainder of the year of 2022 as well. I'm also going to provide their analysis regarding why they're expecting these changes in 2023. And of course, I'll also provide my own analysis regarding what's needed in order to get these numbers right here, because some of them, honestly, I'm kind of scratching my head regarding their trends that they're forecasting for 2023. So there's a lot to cover in today's video, so let's go ahead and dive right in. So again, this is according to Realtor.com that was just posted on November 30th this year, their housing market forecast through 2023. So here's what they said here at the beginning here. After being overwhelmed in the housing market frenzy in recent past, homeowners, sellers, buyers, and renters may be underwhelmed in 2023. The slowdown in home sale transactions that began as mortgage rates, of course, rose in 2022 is expected to continue, leading to a moderation in home price growth and tipping the housing market balance away from home sellers. In other words, home sellers had the clear advantage over home buyers in 2020 through the early parts of 2022. Of course, right now, a lot has changed and it's moving more towards the buyer's market right now, given the fact that inventory has been increasing so much. We've been seeing a decrease in home sales, et cetera, et cetera. So they're basically saying here that it's going to be tipping in the favor or towards buyers in 2023 here. However, though, a moderation in home price growth will not be enough for the housing market to be a buyer's bonanza. Instead, home shoppers will enjoy advantages such as growing housing inventory, more houses listed for sale. However, though, costs will remain high and there'll still be affordability challenges. And here's something I actually really like what they said here. They say if home shoppers and home sellers, in other words, home buyers and home sellers, have unrealistic expectations, this could find themselves in a stalemate in the year ahead. And that's kind of what we're seeing right now, right? Because home prices or listing prices are very much high compared to historical levels. And that's why we're seeing this huge increase in price reductions. So that's on the sell side, where a lot of home sellers are not willing to sell their houses for market value right now. But also on the buy side, we're seeing a decrease in home sales and of course a decrease in home showings across North America, yet we're still seeing a lot of overzealous home sellers. Therefore, according to Realtor.com, the 2023 housing market could become a nobody's market, not friendly to buyers nor to sellers. So here's a summary of their housing market predictions for 2023 and also what they're expecting for the remainder of the year for 2022. They also provided historical data for 2021, as well as the averages from 2013 to 2019, obviously pre-COVID levels there. So let's first talk about mortgage rates, because a lot of you guys want to know what's going to happen with rates, given the fact that we've been seeing this huge increase in rates so far this year. So their forecast for 2023 is average rates at 7.4% for the entire year. So the average for entire year 2023 is going to be 7.4% and 7.1% by year end. Now, of course, this is much higher compared to 2021, because back in 2021 and frankly 2020 as well, average rates were about 3% for 2 years there. And now they're calling for the rate to increase to 7.4% on average for 2023. And by the way, this is also much higher compared to the averages from 2013 to 2019, because during that time frame, average rates were about 4%. Now they're going to be averaging potentially at 7.4% next year. Here's something interesting as well, because for 2022, they're calling for the average for the entire year to be 5.5%. and then to be 7.5% at year end this year. We'll have to see about this 7.5% rate, because rates right now have been more or less at 6.6% for about 3 weeks now. So we have about a month ago to before year end here. So I would kind of be surprised to see rates increase by almost 1 percentage point in one single month here. So we'll have to see what this looks like at year end. Realtor.com also provided the real estate market predictions for home prices next year. So they're forecasting for home prices to increase by 5.4% in 2023 compared to 2022. And by the way, they're calling for home prices to increase by 10.2% for the entire year of 2022. So taking a step back here, at 5.4% home price appreciation in 2023, this is below the levels we saw in 2013 through 2019. On average, home prices increased by 6.4% during that time frame. But last year increased by 17% on a year-over-year basis here. But 5.4%, what do you guys think about this? In my personal opinion, I'd be surprised to see a positive growth rate in 2023 regarding home prices because of all these headwinds that home buyers are facing right now and due to this spike in rates we've been seeing so far. But what do you guys think? I'm not a real estate market fortune teller. But if I had to guess, 5.4% seems rather bullish if they're calling for rates to average 7.4% for the entire year. I just don't see how we have home price growth when rates would be at 7.4%, when back in 2020 and 2021, rates averaged 3%. So I really don't see this happening. But of course, like I said, I'm not a real estate market fortune teller. They also provide their forecast for existing home sales in 2023 to be 4.53 million home sales for the year. And also this year, they're calling for 5.28 million existing home sales this year, which I'm really scratching my head regarding this because I think this is nearly impossible based on my own analysis. And I'll share that with you guys in just a little bit. Realtor.com is also calling for inventory to increase by 22.8% in 2023. And by the way, this is existing home for sale inventory, which is a fancy way of saying total inventory, which includes houses for sale plus pending home sales. So that is actually going to be increasing by 4% this year, which is what they're expecting. But next year, they're calling for that to increase by 22.8%. Again, total inventory, which includes pending home sales plus houses for sale, increasing by 22.8% in 2023. And this is obviously vastly different compared to 2021 because back then, total housing inventory decreased by 19.4%. Now they're calling for it to increase by 22.8% next year. They're also calling for single-family housing starts to decrease by 5.4% on a year-over-year basis in 2023. So single-family housing starts to decrease by 5.4% compared to 2022. That would equate to 900,000 single-family housing starts in 2023. And by the way, in 2022, they're expecting for 1 million single-family housing starts for the entire year this year. And looking at the most recent trends we have from the U.S. Census Bureau, this 1 million single-family housing starts is entirely possible because look at this. Year to date right now, for one unit, a single family, there's approximately 885 housing starts for single family houses. This means we need approximately 115,000 more housing starts for the remainder of the year, which is November and December of this year. So 115,000, divide that by 2, that would be approximately 57,000 housing starts in November as well as December of this year, which is entirely possible because back in October or last month, there was 71,000 single-family housing starts. So we need approximately 57,500 in November and December in order to get to 1 million housing starts for 2022. Realtor.com also is forecasting for the home ownership rate to be at 65.7%, right on par with 2021 as well as 2022. They're also calling for rent growth in 2023 to increase by 6.3%, whereas in 2021, it increased by 10%. And they're also expecting for rent growth to increase by 7.7% this year. They also provided a detailed analysis regarding why they are expecting these numbers for 2023. So regarding home sales, here's what they had to say. In 2013, the annual tally for existing home sales surpassed 5 million after 5 years below that threshold, following the unwinding of the housing boom, of course, in the mid-2000s. And by 2015, existing home sales totaled 5.25 million. And in 2020, of course, we had the initial pause of our housing market back at the onset of COVID here. And we had, for the year in 2020, 5.64 million home sales for the year. And that's above the pre-pandemic range of approximately 5.27 million home sales each year, going back from 2013 through 2019. And then, of course, in 2021, mortgage rates hit all-time record lows in January. Back in January 2021, rates decreased to about 2.7%, the all-time record lows for rates. And also one of the reasons why we saw this big increase in home sales in 2021, which again was 6.12 million home sales. And that was at that time, a 15-year high. One of the reasons why we saw this huge increase in home sales in 2021 was not only due to the record low rates we saw back in January, but also in August, because in August, we also reached very, very close to being at record low levels as well regarding mortgage rates. So for 2021, we kind of had this 1-2 punch because we had record low levels for rates back in January 2021, and also more or less toward the end of the year as well. And of course, because of that, that spurred home sales in 2021. But of course, in 2022, rates increased so much, and that caused a decrease in home buying demand, and therefore a decrease in home sales as well. So they also provide their expectations regarding existing home sales for 2022, given the fact we have November and December ahead of us here. It says here, with 2 months of data remaining, we expect existing home sales to total roughly 5.3 million in 2022. To be exact, they're forecasting for home sales to be 5.28 million for the entire year this year, which I'm really scratching my head regarding this. And have a look at this. Take a look at this. So here's existing home sales on a non-seasonally adjusted annualized rate. So these are actual number of home sales by month for 2022. And this is from the National Association of Realtors, by the way. So far this year, based on my analysis, there's 4,374,000 existing home sales so far this year. That's January through October this year, per the National Association of Realtors. Here's what Realtor.com's forecast, though. It's just kind of laughable, of 5.28 million. So in order to get to 5.28 million home sales for 2022 as a whole, we need approximately 906,000 home sales from November through December this year in order to get to 5.28 million. Therefore, we need approximately 453,000 home sales for November and December on average in order to get to 5.28 million. Now, to me, this is laughable because they're forecasting for home sales to be averaging at 453,000 in November and December. But look at this. In July, that was our approximate number of home sales. So what they're saying right here is that home sales for November and December this year are going to be on par with July 2022. So what they're basically saying right here is that home sales are going to average the levels we saw back in July when home sales were 454,000. And I don't know how we're going to get there, right? Because in November and December, we tend to see a decrease in home sales every single year because of a seasonality of our housing market. A lot of people don't want to buy and move during the holidays. So it would be a huge surprise to me to see if we had the same number of home sales in November and December this year as we did in July of this year. On top of that, in October, we only had 371,000 home sales. So I don't see how we're going to have more home sales in November and December when we only had 371,000 in October. Instead, here's my housing market predictions for home sales in 2022, which I actually stated back in August. So I'm forecasting for home sales to be in the range of 5 to 5.1 million for 2022 and not 5.3 million, nearly 5.3 million according to Realtor.com here. So if we're going to have 5.1 million for home sales for the year, that would have to be an average home sales for November and December to be about 363,000 home sales. So at 363,000, the average from November and December, that's right on par with what we saw last month back in October, and also much lower than the average needed, according to Realtor.com here, in order to get to 5.28 million. In any case, going back to Realtor.com's report here, it says the deceleration in home sales. I really hate that word deceleration. Why can't we just say decrease? The decrease in home sales is likely to continue as home prices and mortgage rates limit the pool of eligible home buyers. Well said. We anticipate that existing home sales will decline further by 14.1% in 2023, registering an annual total of only 4.5 million home sales in 2023. That would be their lowest levels since 2012. They also talk about their forecast for home prices in 2023. It says the major question on the minds of homeowners, of course, home buyers alike, is what will happen to home prices next year. It says soaring prices were propelled by all-time record low mortgage rates, and that is a thing of the past. Home price growth is expected to continue slowing, dipping below its pre-pandemic average to 5.4% for 2023. So the forecast for home prices in 2023 is an increase of 5.4%. They also talk about the increase in mortgage rates causing a decrease in buyers' purchasing power, because they say here the average monthly housing payment compared to in 2023, or this is a forecast for 2023 compared to 2022, is a 28% increase. So a 28% increase in your average monthly housing payment in 2023 versus 2022. And that would be roughly double the typical payment for buyers compared to 2021. Realtor.com also provides some additional information regarding inventory and their forecast for 2023. So in October 2022, total housing inventory of houses for sale increased by 0.5% compared to the previous year. And this, by the way, is total inventory of houses for sale, which by their definition includes houses for sale plus pending home sales, only increased by 0.5% compared to last year. However, inventory of active listings, in other words, houses actually for sale, has grown by 33.5% compared to the previous year as of October 2022. And this increase of active listing inventory is partially due to the fact that home buying demand is taking a dip and houses are taking about a week longer to sell right now compared to last year. And their forecast here calls for total inventory, which includes active listings plus pendings, to grow by 4% in 2022 overall, and also to increase by 22.8% in 2023. And they say here the level of inventory in 2023 is expected to fall roughly 15% shy of the 2019's average. In other words, they're calling for inventory to be 15% below 2019's levels. They also talk about a wild card for inventory though, and that is being seller sentiment and activity, or seller activity here. They talk about newly listed houses or new listings declining by 15.9% as of the end of October compared to October 2021. So new listings are down by about 16% on a year-over-year basis right now. But if this trend reverses and we start seeing an increase of new listings, inventory could rise further beyond current expectations. So what's really interesting to see this year is that this inventory growth that we have been seeing so far this year is due to a decrease in home buying demand and not due to an increase of new listings. In fact, new listings have been declining for quite some time now. I believe it's a few months now. And therefore, if we start to see more home sellers list their homes for sale, that could increase inventory beyond their expectations here. They also provide some analysis regarding rent growth in the US. It says after 13 months of double-digit increases, year-over-year rent growth slowed to single-digit pace in the late summer of 2022. Here's our forecast though. US renters will continue to face challenges from limited supply and excess demand in the coming year that will keep upward pressure on rent growth. And therefore, at a national level, we forecast rent growth of 6.3% in the next 12 months, somewhat ahead of home price growth and historical rent trends. And speaking of historical rent trends, the historical average of rent growth from 2013 through 2019 per year or by year was 5% each year. So 5% increase in rent growth from 2013 through 2019 on average per year versus their forecast for 6.3% in 2023. And also in 2022, they're expecting rent growth to increase by 7.7%. They also talk about housing affordability being the main factor driving home buying demand and what our housing market's going to look like in 2023. It says incomes, mortgage rates, and home prices are the three main components that determine whether housing is deemed affordable. And because, of course, we have this housing affordability issue in the US right now, it says that the search for affordability keeps cross-market shopping elevated. And what they mean by cross-market shopping is this right here. This is someone who is shopping for a house somewhere else than they're currently living. So someone who lives in New York City, for example, and they're searching for houses for sale in Austin, Texas, for example. That's what's called cross-market shopping here. And they say here in 2022, even more workers are returning to the offices, but cross-market shopping has climbed to new heights, accounting for nearly 61% of page views on Realtor.com for the third quarter. So what I'm guessing they do is they look at IP addresses of people searching for houses for sale, and they're looking to see, are they looking at different areas? So what they're saying right here is that approximately 61% of all page views on Realtor.com in the third quarter came from people looking for houses for sale outside their area. And in fact, they actually ran a study in the second quarter of this year looking at shoppers in the Northeast and the West, and they found that more than 7 in 10 cross-market shoppers from these regions here, the Northeast and the West, were looking for homes in areas 10% or more cheaper than the current locations. So people looking for houses in more affordable areas due to this affordability issue we have in the US. And they say here remote work and soaring costs are expected to keep the search for affordability alive and well, propelling home price growth in smaller, affordable markets and tapping the brakes on home price growth in some of the most expensive metros. In regards to decreases in home price growth in more expensive areas, have a look at this. This is according to Redfin. They looked at home prices for the 4 weeks ended November 20th of this year. And they only looked at the 50 most populous US metros. They found that San Francisco home prices, or the median sold price, has declined by 9.5% on a year-over-year basis. And this, by the way, is the biggest decrease in home prices on a year-over-year basis amongst the 50 most populous US metros. And with that said, what do you guys think about Realtor.com's housing market forecast through 2023? I'd love to hear from you guys. Please comment below. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you in the next video.